What if I told you that for less than the price of one house in Sydney, I bought 5 whole properties in Melbourne for the same price? And no, this isn't a joke. I'm talking about a real property, real bricks, real backyard, and real rental income on one title, exactly the same price. I actually bought this property myself and it's already under contract and it settles in just a few days. And in this video, I'll show you exactly what property I bought and where exactly it's at, and the numbers that make this deal ridiculously undervalued, and how you can start spotting property deals like this too. This property that I just bought is absolutely going to blow your mind. It is 5 properties for the price of 1. Let me show you exactly what I bought. So this is a block of 5 villas in the location in Melbourne, and this is the address right here, 1-520 Emerella Street in Tullamarine, if that's how I'm pronouncing it correctly. For those of you who don't know where this is about 20 to 30 minutes from Melbourne CBD. So you can see it's right near the airport. It's in between the airport and the city. So 19 kilometers, 20 to 30 minutes roughly from the Melbourne CBD. I'm actually under contract for this property. I bought it myself. So it's 5 entire villas. This is the average floor plan right here. So you walk in, you've got lounge room, bedroom, bathroom, laundry, kitchen, and these walls you can take out. So it would be a lot more open and nicer. Let me show you through. So that's an overall aerial view of the actual property. You can see the little backyards there. See, people call these units, but these are more known as villas. So you can see a small courtyard there. You can see their individual fence, and then the bigger one at the side that has a wrap around there. So it sits basically on 1,011 square meters. You're never going to guess how much I paid for this. I paid only $1.67 million for the entire block. Now, if you divide that by 5 on a calculator, that works out to be only 334 villa. So each individual property, if you split it up, is only 334,000. And right now, this actually settles in a couple of weeks, I think in August 2025. To me, this is amazing value. So this is the block from the front. So you can see driveway here, front yard there. You could even put a fence there and actually make that exclusive use for the actual front villa there. And then you got entry there, 4 entries there, and then the 5th entry at the back. You've got a carport on the other side as well. That's another photo there. This is an internal photo of the lounge room. That's an internal photo of the kitchen, bedroom, another bedroom, built-in wardrobes, aerial view. So you can see Westfield Airport. You see the tram line, shopping centers, city over there, floor plan again, carport. If you want the exact formula I've used to build my property portfolio to over 150 properties, I put it all in a free download. It walks you through the exact same steps I've used to scale my portfolio to over 150 properties and avoid all the mistakes that normal investors make. The link to grab the copy is in the description below. Now, let me show you, this is amazing value because this is only $1.67 million, right? If you were to compare this compared to a property in Sydney as an example, there is not a chance in hell you would get 5 villas on one title for $1.67 million. Now, 20, 30 minutes out of Sydney would be, let's say, this property. And this is just one property for $1.75 million, which is a house in Bankstown, as an example. This is a actual copy of the contract to sell. You can see $1.67 million. That's the address. Basically, with this type of property, right? So each of these villas will rent out for around $450 per week. Now, $450 per week times 5, that is $2,250 per week. Per year, it's about like $117,000 per year. Now, of course, we divide that by $1.67 million, and that ends up being a 7% gross rental return. Now, this property is on one title. There's no strata, there's no body corporate, there's only one lot of council rate. I'm adding this to my personal portfolio. These are amazing buys. And one of the ways I look at this deal is when I found this property online, I'm like, this thing is significantly undervalued. And it was at a time, still Melbourne, I was lucky enough to get this on I think it was a 5 or 6 month settlement. So I extended the settlement because I've been buying a lot of unit blocks myself personally. And at this time I was like, you know what, I'll go on 1.67. And I ended up negotiating that price. I think they originally wanted about 1.85. And they had a few by memory, they had like a contract crash and other people that were going to buy it, but they couldn't buy it, couldn't get finance. So I just said, basically, I'll sign a contract, basically cash, unconditional, no finance, no pest and building, even though, of course, I was going to get finance after the fact. But that got it across the line at about a 5-6 month settlement, and it settles literally in about a couple of weeks. But when I was looking online in this location, right? So Tullamarine, if I'm even pronouncing it correctly, I've never even been there. But I found that villas like this, similar sizes, bedrooms, bathroom, and square meterage like this, I looked online, I could see at the time they were selling for like 380, 400,000. Like there were high threes. And now over the last 5 months, you see, this is a unit as an example. 2 bed, 1 bath, 2 car. They say just a car space out the front, but they say that's 2. You can say this one's probably slightly, very, very similar layout, right? Very similar layout. It's just got the carport on the side, but it still has a courtyard. And how much did this sell for, right? 440K. But again, I got mine for only 334 a piece. So if you were to take 440 and times by 5, well, then it's 2.2 million as an example, when I paid only 1.67. So that's a, discount. Now, if you're serious about building a property portfolio and creating wealth, and you don't want to waste years chasing the wrong properties or buying the wrong stuff, you can book a free call with my team, and we'll look at your exact situation and help you move forward towards the kind of deals that I've shown you today. Use the link in the description to book a call today. Oh, let me show you another example. So that's a villa again, very similar, same suburb, roughly the same size. Yes, it's probably slightly superior, but still, even if that's 440 and the ones that I got are, let's say they're individually 400 times 5 is still 2 million, and I paid only 1.67. So we're still, 300,000-ish up, which is amazing. Let me show you another one. There's another one here. This one's definitely superior again. This is in the same suburb as an example. This one, in terms of location, it's off the main road. So, the location's probably not as good, but it is nicer internally, and it is slightly bigger inside, which is fair enough. But again, those are 550. When I look at and I analyze a block of units or a block of villas or a block of townhouses, this is the stuff that I'm looking at. The individual worth is one. That's the key one to learn. Another really cool thing to look at is the individual land value, right? So 1,000 square meter block anywhere in this suburb, especially that has the ability to build 5 units on it, just the land alone, I'd say, if I had to guess, would be worth, if it were from a resale value, probably at least 1.1 million, probably more so like 1.3, let's say in the middle 1.2, right? So if the land's worth 1.2 in being in the middle, and I paid 1.67 million, minus 1.2, then I've pretty much purchased 5 villas, all livable, all rented, etc., for 470,000 for the building cost. Now divide 470 divided by 5, that means I picked up the actual building structure per unit for only 94K. These types of properties get me so excited for that reason. Now, 94K for the actual structure per unit. To build a unit nowadays in 2025, whether depending on what state you're in, but like the average quotes that I've got from, considering building a block of 20 or 50 units, which I could do, is just that it's going to cost to build a unit nowadays like 450, 500,000. If the land's worth, and this is where we go towards a replacement value and looking at that perceived value. If the land's worth 1.2, and let's say a unit or a villa would be, let's say you get them for 450 a piece, and that would be 500K to build. But say 450 as an example, 450 per unit to build times 5. So just to build the thing is going to cost probably 2.2 million when you consider everything, the plumbing, the electrical, the bricks, the timber, the roof, the lab, the everything, right? The approvals. It's just insane. So 2.2 million plus, again, the land on top of it, 1.2 million. Your replacement cost is probably like 3.4 minus 1.67 million. I bought it almost like probably I'd say 1.7 million under replacement value. You bought a few properties already, and you've got now you've spoken to your broker, and they said you can borrow 1.5, 2 million, 3 million, 5 million, 10 million, whatever it is. The way of the future, the way to make the most capital gains and the best rental return, and you make the most wealth, to me, is by buying blocks of stuff. So like you could buy a shitty house in Bankstown in Sydney. If you were from Sydney, and let's say, I want to buy a house in Sydney, I wanted land and blah, blah. You're in for like a decent house in Sydney for like a minimum 1.5, 1 point, something like that. Unless you go way further out to like Mount Druitt, where I grew up, and then you can still probably pay like $1 million, not 800K for it. But this is one house. The rental yield perspective. So find any house in Sydney, in Western Sydney, right? Because obviously you got to buy in the West for 1 point. And I only picked this house randomly, right? Because this house is, I paid 1 point, this house is 1.7, 30 minutes from the CBD. It's around the same price as one house. You can buy 5 properties for the price of one. But the rental return is the biggest thing to consider, right? So this house, as an example, would rent out probably for a maximum of like 900 a week. Probably more like 850, I would say. But let's say 900 a week for this particular house as a comparison. Times 52 weeks in a year, that's 46K a year. Divided by 1.75 million. Let's look at the rental return. That rental return for this house in Sydney is it works out to be 2.67% gross rental return. So you are under a 3% rental return, 2.6. And basically right now in 2025 and 2026, this is the biggest opportunity to buy bigger stuff in Melbourne. Like I'm trying to buy at least 50 blocks of units in Melbourne, because Melbourne is, to me, is significantly underpriced. It's had land tax issues, it has government issues, it has buyer confidence issues, which is starting to turn around. It's soon enough going to be all over the news that the Melbourne market is going to explode, that it's going through a growth cycle, that it's bouncing back. Probably news articles already started to come out. I would much rather buy a box of units like this, where you can get them under replacement cost, significant better rental yield. Like, it's a 7% rental yield, right? So the cash flow on this type of property, I had to put down for this particular property 30% deposit. I probably could have found a lender that did less than that. So, 1.67, put down 30%. I had to put around, 500K down to buy this property. But to me, once the rents hit 450, because yes, a lot of these properties, and when you buy blocks of units, 9 times out of 10, if not 10 out of 10, one of the things you'll find is that they are under rented, and they've got basically the previous either landlord or whoever it was hasn't increased the rent in some significant time. But if you look online, again, if you don't believe me, jump on realestate.com.au and try to find in this type of area a 2-bedroom unit or villa. And what are they renting for? And they're renting between 430 to 450, I'd say, would be market value for these type of properties. Once the rent gets to that amount, I will basically use this order a valuation based on what the new rents are at for this comp. One of the pains in the bum buying a block of units is that you can't do a desktop valuation. It's no drive-by valuation. It's a full internal valuation, and they value it as a block of units, which means it has a lot to do. It's mainly to do with the rental return of the property. If it's under rented and you get a valuation based off those rents, then your valuation is not going to reflect very good. It's not going to come back good. But if your valuation comes back, if your rents are bumped up to where there should be a market value, and then you can say, oh, like they were renting for 300 a week, now they're renting for 450 a week, and you got 5 of them. Well, then to me, this will be valued at, I'll probably get this valued at least $2 million. I paid 167 again. And then that, 300, 400K, I'll be able to refinance, pull my equity out. And then out of the 500K, I'll probably be able to get back, hopefully, 300,000, maybe 400,000. So the end result is that, to me, I will have settled this property within the next couple of weeks. Should be within the next 4 to 6 months. I'll be able to refinance it, because then all the leases will be where they should be. I'll refinance it. I'll pull out 300, maybe 400. It could get valued at 2.1 million. Let's say worst case 2 million. And then I extract the equity from that property, which out of the 500K, maybe 5 after stamp duty and all that stuff, probably like 570 are probably into it. And then I'll probably pull out 350, 400. So yes, I'll still have about 200K in this property, but I would get 70, 80% of my funds back in my control to then go and buy another block of units, or a block of townhouses, or a block of villas. To me, these are far better, especially if you're getting into the stage in life. You don't want to buy 6 properties for 300K. Just go and buy a block. We help a lot of investors buy blocks like this. Like, I personally source and negotiate blocks of units, villas and townhouses and big commercial stuff, multi-unit dwellings. That's what I focus on mainly right now myself. Yeah, if you're interested in finding out more information, hit up myself, my team on the website, delaneyproperty.com.au, and email at admin@delaneypg.com, or give us a call on the 1300 number, or visit us at our new headquarters in Strathfield. The address is 8 Gould Street. Now, buying 5 whole properties for the price of one does not happen by luck. There's a unique strategy I use to find deals like this. In this next video, I'll show you how exactly it works. So click through now and see how I find properties that are up to 30% below the bank valuation.